do it. Hello, everybody, and welcome. My name is Lucy Tessa, and I'm the owner and founder of Consult for Success, a consulting firm. And I want to welcome you today to our next video of the series, Interview with Experts. First of all, thank you so much, Tammy, for accepting my invitation and for sharing some of your secrets with us. And today's topic is quite important for a lot of business owners, even though it's as important as our health, as for our bodies, is as for the health of our businesses. And so you are owner of TKT Tax and Accounting Company, based in Camarillo, around LA area. And our topic for today is going to be prepared to avoid despair at the tax season. So Tammy, I would love to, if you could say a few words about yourself first.
Of course. Hello. Yes, I have been doing accounting for about 30 years now, or actually more than that, but I've been doing taxes for about 15. I became an enrolled agent about in 2007. Mm-hmm. And what that means is I've taken a special exam with the IRS, and I can prepare taxes in 50 states. Wow. And represent people before the IRS. Mm-hmm. So I was working for an accounting firm in Thousand Oaks, and when the principal retired, I bought out the firm, and that's how TKT Tax came about.
Wonderful. Thank you. Awesome. So when we were talking about what would be the most valuable thing to know for entrepreneurs and small business owners, based on your expertise, we thought maybe what would be the best to start since you have so many years of experience and you have encountered a lot of different scenarios and also a lot of the despair probably at the tax season when the owners want to just pull their hair out because they made some mistakes, or they didn't do certain things that if they did that, they could actually be prepared and have more ease at the tax filing season. So what would be the main mistakes that you have seen that small business owners or self-employed people make that could be avoided?
Okay, sure. Well, in addition to the original startup mistakes, having your accounting software correct is a huge one, because if you're inputting things incorrectly from the beginning, that's going to continue through. So that's one of the things. One of the largest mistakes I see is that people don't do their accounting through the year and gather it all during tax time. And a lot of times that's too late to do tax planning. You can't make certain business decisions after the fact.
So what kind of, that's because I've encountered people that even don't use any software, right? Especially the startups, they're on a tight budget. So what would you recommend they use, or what have you seen people use?
For most businesses, I highly recommend QuickBooks. Okay. There are different levels of QuickBooks and different price levels. It can be quite complex. Mm-hmm. So that's a really great software.
Got it. Okay, cool. Yeah, would you also recommend putting it into Excel sheet, or what kind of size of how much income would you say, what is the minimum amount of income that they would say, okay, now I'm ready to switch to QuickBooks? Or would you suggest that from the time of actually starting the business, they input everything, they do the investment, even let's say the business doesn't make any money yet, but they invest into getting the software to get their books set up correctly?
Okay, that's a really good question, because I don't feel it really goes by the income. It's more the number of transactions that are involved. Mm. And, there's going to be costs setting it up. So a lot of people fail to include those costs. So if you have your software set up from the beginning, you can include all of those startup costs. And the number of transactions has a large impact, because if you've only got 3 transactions per year, it may not be worth your investment. You can easily track those on Excel or some other form.
Mm-hmm. That's a very good point. Thank you. You also mentioned another very interesting point, well, important, that they don't do their accounting during the day, during the year. So what impact it has if they don't do their accounting and they think, oh, well, in January, February, I'll just, do everything for the past year. So why it's not a good option?
Sure, there's a lot of reasons. So the main one I had mentioned was tax planning. A lot of times you can't make certain decisions. Maybe you want to have that large equipment purchase to reduce your expenses for the year. You can't do that in January, February. That needs to be done during the calendar year, assuming that you're a calendar year business. And, the other thing is doing a mid-year review of your books gives you a lot of opportunities to assess and strategize for things like, is it a good time to hire employees? How am I set up financially? What are my tax liabilities? What are my tax planning options? Choices like that. There's a lot of those that can be made during the year. I also suggest doing the mid-year review is what I call it. It gives you an opportunity, assuming that you've set your goals, you can find out where you're at with those. You can kind of assess what worked and what didn't and make those decisions as well.
Yeah, that's wonderful. Well, there's also another aspect that comes to my mind is paying estimated tax. Because
Yes.
if we are self-employed, sometimes the income fluctuates. It's not like having a job when you have a stable income each month. So during the mid-year review, they also, part of what they review, as you said, their goals and if they met the goals and how they can improve, but also how much money they need to pay to the government for the estimated tax, right?
Exactly. It's often a shock for new sole proprietors when they find out that they're paying both sides of the Social Security taxes. So that's an extra 15.3% of tax. And if they don't prepare for that during the year, they're going to be shocked come tax time.
True. I actually heard of somebody who forgot kind of about the estimated tax, and then once they found out, they didn't have enough money to pay it, and they actually had to close the business because
Wow.
they were owing so much for the tax that their accounts were frozen basically, and they went out of business because they didn't calculate in the cost of the tax payments.
Right. That happens. It's really sad, but that is part of the preparation. You've got to look at those things. That's some of the things that we help clients with, is to make sure that those things don't fall through the cracks. We want to make sure their business license gets renewed and things like that are taken care of.
Got it. So do you also renew the license for them, or you just give them the guidance how to do it and when to do it?
We can do both. So when I meet with the clients, we decide who does what, and we can do that as well.
Got it. Okay. If I go back to the software, one of the benefits that I was thinking of when people are setting up upfront is to have all the data in one system. And also they can deduct the expense on the software from their income, right? So it lowers their tax that they're paying.
Yes, of course.
So and
there's a lot of expenses that people don't realize they can deduct that are perfectly legal deductions.
So that's additional benefit of having actually a great reliable accountant who knows what they're doing, because they can help them actually pay less tax at the end during the year, and also at the end in April, right?
Of course, yes.
What would you think are the tax deductions, or one of the tax deductions that people don't realize that they can deduct?
Their personal mileage, their personal cell phone usage. There can actually be quite a lot. A lot of times people go out and buy supplies for the business, whether those are, say, kitchen supplies or office supplies. They run out and don't realize that that's being used for the business. So, of course, that's a legitimate expense. There's also people who have home office businesses, and there's a lot of expenses that can be deducted in that fashion as well.
Mm-hmm. So for startup, would that be beneficial to kind of just have a like consultation, let's say startup? Do you provide something like that, like a startup consultation when you also maybe help them with the startup paperwork, like filing DBA or deciding if whether they should file just a DBA or whether a corporation would be a better fit for what they're doing?
Yes, we offer a 30-minute free consultation, and during that time, we can talk about different things. We would start by talking to the customer and finding out what type of entity they want to start if they haven't already done that. Because this, depending on the entity type, that flows through to the other things that are needed. You know, if you're a sole proprietor, you're going to need different things than if you're a corporation.
Got it. Is there any, let's say somebody already had their business for some time as their DBA. Is there an income level that you would recommend them to actually go and seek out an accountant unless their accountant already advises them to switch the corporation to a corporation or different structure?
You know, for me, there's not really an income level. Again, it goes back to all of the details of what kind of product or service you're providing, what kind of liability you might need. There's a lot of other indicators to determine that, so it's not solely on the amount of income they're making.
Got it. One of the things you mentioned at the beginning of our conversation was having the book set up correctly. So what mistakes did you see people made with setting up books? Because it looks like it's quite an important factor. So what makes it set up correctly?
There's a lot of things. So just posting transactions incorrectly, using the wrong coding, setting up the chart of accounts, and working together with the clients to code things properly is really key. There's a lot of transactions that may not be deductible, and the clients don't know about it, and then come tax time they find out that, gee, my health insurance premiums weren't deductible, and now there's another, what, 20,000 or so of income that they didn't expect, and that can be huge.
Oh, wow. Yeah. What about bookkeeping? Have you seen any that they told you, you know, I have my bookkeeper do everything for me? Do you see anything that sometimes, how can you tell the good bookkeeper compared to somebody who is just, you know, saying they're a good bookkeeper, but they actually don't know much about how to do it correctly?
That's a really good. Oh yes, Lucy, that's a great question because I see that all the time. And there are great bookkeepers out there. But I do suggest, even if you have a bookkeeper and love them and want to keep them on, have an accountant review them and just take a look at the books. You know, maybe there's one little thing that can be fixed on how they're coding or doing things. But as a business owner, unless you are an accountant and understand how that works, it's really hard to determine if that bookkeeper is doing a great job. So, you know, there's a lot of errors they can make. For example, not renewing certain licenses and stuff. So to have an accountant review and just make sure they're doing a great job. And, you know, it doesn't mean that you are always replacing that bookkeeper. You could be helping them so that that bookkeeper does work out great. And maybe there's a couple tweaks that can be made to ensure they're doing a great job.
Got it. So kind of work together with the bookkeeper and maybe jump on a conference call or something like that, or just share the books with you so you can have a look.
Yes.
And so they make sure that actually all the deductions are there, that they can be deducted, that they also record everything that needs to be recorded.
Correct.
What do you see clients do nowadays? Because when I'm talking about records, that brings me up, I believe IRS has like 7 years that you need to keep your records. Is that still, now with the digital filing system, I guess that's going to be much easier to keep even longer time. Do you see your clients having still physical receipts or digital receipts? Do you find it, do they use any applications that you would find interesting, that you would recommend? So I'm not sure if QuickBooks actually can scan or save the receipts or keep track.
Yeah, so I haven't dealt too much with that area. The clients that we do bookkeeping for, we scan all of the documents.
Oh, okay.
So we have those, and we back those. We have a number of types of backups that we have, so we can ensure that we can retrieve those when needed. So, and really, the IRS they can only audit you for 3 years past the due date of your last tax return of the tax return. So, as long as that's a closed year, then you don't have to necessarily keep all records for 7 years.
Oh, that's good. What else is good about having the mid-year review? One of the things that we mentioned was to plan also for the estimated tax.
Yes. And we can calculate those because, like you said, especially new business owners, they're not always sure how much income they're going to make. So maybe we need to do the calculations mid-year or even per quarter and to pay the proper estimates.
So what happens if they don't pay an accurate estimate?
So there will be interest and penalties that will apply.
Ooh.
And those can add up quickly.
Wow. It analogy comes to my mind, like, going to a dentist. It's not always pleasant, but it's so important for our health. And just like doing taxes, it's not the most pleasant thing that the business owner does.
Yeah, and I often see people filing their Secretary of State, the Statement of Information that they need to do, depending on the entity type. That'll be annual or biannual. There's things like that that are so easy to miss when you're a business owner and you have so many things to think about.
Yeah. So in a way, actually investing into hiring somebody like yourself could actually save them money in the long term.
Definitely.
They have the peace of mind and they know that they deduct all that they can deduct. So they maximize their deduction level, and also that they don't deduct something that could raise red flag with the IRS and possibly trigger audit.
Trigger audit and all of those penalties and interest that continue to accrue. And if it's incorrect, it's not necessarily that you're going to get audited then. You may get audited a year and a half later. So you've got the interest for 18 additional months.
Oh, wow. I just thought of, because there's just been a change, I believe, in the state of California where we are, and that was about filing sales tax. I believe there was a new entity created that's going to be in effect, I believe, from next year. So things like that too, because I usually, unless they are interested in that area, business owners usually don't know about these changes of the law or accounting law or any new entities that they have to start filing differently suddenly. So that's additional benefit why to use qualified accountant.
Of course, yeah. And like I said, if the business owner doesn't understand the accounting and all of the laws, I mean, it's kind of like payroll. You think you're just going to hire an employee and you're going to agree upon the amount of wages, and that's great, but there are so many payroll laws. There's a lot of people who have large, expensive lawsuits because they missed one or two little details of those payroll laws.
So does your company also take care of the payroll?
We can do payroll, and it depends on the quantity of the payroll, because sometimes some of these other companies are more inexpensive depending on the size of their payroll.
So what would be the sweet spot for you if anyone wanted to contact you and ask you a few questions? What kind of business would be a good match for you?
We like service businesses. We have a lot of people in the entertainment industry. We have some IT people. We have clients that are in real estate development and property management. There's a lot of different areas, but especially the service field.
Got it. Thank you. Well, to end it on a happy note, I was thinking, okay, we covered the mistakes. We covered the worst case scenario. And I wanted to see, okay, do you have a success story that a client that really you remember that you made a difference for them? That they said, wow, thank you so much. I mean, this was unbelievable.
Well, of course, I have a few of those. Thank goodness. I'm not thinking of any story off the top of my head, but I do know that I've been able to, by doing tax planning, we were able to save the client a lot of money and make decisions like the equipment purchase or retirement plan contributions that greatly changed the tax liability for that year.
That's wonderful.
So made the client extremely happy with that.
Yay, so saving money. Keeping more, that always makes business owners happy, I believe. That's wonderful. Well, thank you so much, Tammy. What would be, now you mentioned that you offer 30-minute free consultation. What would be the best way to reach you if anyone is interested and they would like to talk to you more? What do they need to do?
Okay, so they can look at our website if they'd like to view that first at tkttax.com. They can give me a call at 805-738-3100, and I am at extension 1. They can email me at Tammy, Tammy, at tkttax.com. So it's Tammy at tkttax.com. And of course, they could fax me if people prefer that as well. And all of that information is also on our website.
Perfect. Thank you so much. Well, really, it's been an honor. Thank you so much, Tammy, for your time today. I really appreciate you. Have a wonderful rest of your day.
Thank you very much, Lucy. You too.